Welcome to Matters Financial and Geopolitical from the Frontier. Excuse the squeaky voice, but I don't know what's happened. We visited Mount Kenya Safari Club with Standard Chartered, who are holding an off-site. Let me put up a photograph of Mount Kenya that I took early in the morning. It really is a beautiful place and one of my favorite in the world. Macro thoughts, G20 in photos, world leaders are at the annual economic summit, which is being hosted in China for the first time. President Xi said G20 should work with real action without empty talk. So I'll get to that whole story because there's some pretty interesting detail that we can go through. Goldman raises its subjective odds of a September rate hike to 55% versus 40%, cuts December to 25% versus 40%, leaving odds of at least one hike this year at 80%. I think that's about right. Equities now offering the highest yield premium over bonds since the 1940s. Great chart from Equities Forum. Home thoughts, first of all, Mother Teresa being proclaimed a saint by Pope Francis. I know there's a lot of debate about her, but my thing is she helped so many people. That's the bottom line. It's the sheer quantum of people. This is Mount Kenya again. When I was a kid, this pool was ice cold. Mount Kenya is at 7,000 feet. And getting in was actually a rite of passage. And then giving you my hometown, Uber have got Uber helicopter, Uber choppers. And this is a photograph taken just after the Nyali Bridge in Mombasa. And then I liked this quotation from Laurent Bell. I am alone here in my own mind. There is no map and there's no road. Political reflections. Snub. Obama denied the red carpet welcome in China. Other world leaders received. And there is a hard edge about President Xi Jinping, and he's showing that he too can play hardball. Then subsequently they had a moonlight stroll. Bloomberg is saying it can't mask lingering tensions between Obama and Xi. After a dinner that wound late into Saturday night, US President Obama and Chinese President Xi Jinping left their delegation behind and went for a moonlight walk around the shores of Westlake. Putin brought a box of ice cream as a gift for Xi Jinping. Russia's President Putin brought out a box of Russian ice cream as a gift to his counterpart. At the beginning of the bilateral meeting, the Russian president recalled how Chinese businessmen during a meeting in Vladivostok told him the Chinese love Russian ice cream. I've promised to bring you some ice cream, Putin said. I've brought it for you, a box of it as a gift. So very subtle, and he's been on the front foot, obviously, if you look at his Twitter stream coming out. He's been meeting with simply everybody, apparently meeting with President Obama as I do this podcast. Justin Trudeau, probably the most extraordinary image man in the 21st century, met with Teresa, Mère. North Korea fired 3 ballistic missiles off the east coast, according to Yonhap. Interesting piece in the Mail and Guardian as China and Japan scramble for Africa. Africa's challenge is to maximize investment. Japan led the world in formalizing its engagement with Africa by launching TCAD in 1993. China and the European Union, incidentally, only climbed on the bandwagon in 2000 when FOCAC was born in Beijing. Several other countries or regions like India, Turkey, South Korea, and South America have followed suit, saying despite its head start, Japan has fallen behind China in the new scramble for Africa. Japan from the start had a similar approach as China had, focusing on infrastructure development and putting little, if any, emphasis on political conditionality, the Western preoccupation which alienated many African recipients of its aid. Yet Japan has not benefited among African countries from this fact. At the political level, it has been seen as part of the West, and China's strong diplomatic outreach to Africa, with its emphasis on South-South, has made a greater impact since 2000. Abe brought about 75 business leaders with him to Nairobi, where he said the partnership connecting Japan and Africa has entered really a mutually beneficial stage. I wrote a piece on the 28th of August about TCAD, calling it the sixth iteration of TCAD. Prime Minister Abe said at long last and exactly as promised, TCAD has come to Africa, pledged $30 billion over the next 3 years, and said throughout the continent, I cannot but think we are witnessing a quantum leap. This is an investment that has faith in Africa's future, he said. Let us advance together, Africa and Japan. The future abounds with blazes of bright colors. Japan, of course, trails China, which recorded total trade with Africa of $179 billion in 2015 versus Japan's approximately $24 billion. And given the level of geopolitical contestation between the two, a lot of commentary tends to be seen through that prism of geopolitical competition. Japan does not need to compete in every country in Africa because for China, the votes at the UN are critical, whereas for Japan, UN votes do not carry the same import. So I expect Japan to pick its African spots, and if you think about it, the Indian Ocean is an appendage of the South China Sea. Japan bears the responsibility of fostering the confluence of the Pacific and Indian Ocean, said the Prime Minister, which was an interesting comment. I also spoke of how Japan, probably with the US and India, would seek to contain and possibly triangulate China in the Indian Ocean. I also said post-Fukushima, the key issue is Japan's energy security. Here too I expect Japan to seek a serious foothold in the nascent East African energy supplies, which run from Mozambique through Tanzania up to Kenya and inland. Japan's energy security is a key issue. Interestingly, if you look at the Japanese investments, there are concentrated in energy, ports, logistics, and what I would call choke points. I said what I've found is that when Japan Inc. makes the decision, and it can be frustrating getting to that decision point, then they are all in. The president of the World Bank, Jim Yong Kim, said that his message to investors at TCAD is to get in on the deal now, invest in Africa. International markets from bad to worse. Japanese 30-year government bonds are now on the longest streak of losses in over 9 years. The big number yesterday, of course, was the on Friday was the non-farm payrolls number, which was enough, I think, to push for a September hike, but not enough to scare the markets. Currency markets right now, euro dollar 111.72, dollar index 95.66, Japanese yen is strengthened 103.35, Swissy 0.9789, the pound, about which I've been bullish for a while, 133.03, Aussie, which has really been quite resilient, 0.7603, India rupee 66.825, South Korean won 1106.27, Brazil real 325.55, Egyptian pound 886.99, and the rand 14.4336 when I looked last. I'll put up a 1-year chart of the dollar yen. My long-term objective is 95, but I still think we can push a little bit higher here to 105. Here's your clues, tweeted David Inglis. It is often argued that there is a limit to monetary easing, but I do not share such a view, said Kuroda. Let's have a look at the Bank of Japan's balance sheet compared to the rate of inflation nationwide. Kuroda, again, there may be a situation where drastic steps are warranted. I'll put up a one-year chart of sterling and have a look at this chart from Aurelia, who's talking of a target of 140. And she's been proven right several times, actually, on sterling and on the yen. Deutsche and Commerzbank apparently are holding merger talks, signals that Germany's banking troubles are accelerating, says Holger. Gold, last trading at 1326.11, held up above that 1300 level, but let's see if we get a rate hike in September, how it reacts. Prince, this is the Deputy Crown Prince in Saudi Arabia, has met with Putin. Let's see what comes out of that. Have a look at this chart of Saudi oil production, which is at an all-time high from Javier Blas. And Iran has told APEC Forum it's ready to raise oil output to 4 million barrels per day within 2 or 3 months. Put up a one-year chart of crude oil, which had a strong rebound yesterday and is up strongly today as well. BRICS leaders meet ahead of the G20 summit in Guangzhou on Sunday. Have a look at the photograph. I actually was on Al Jazeera not too long ago when I said that I thought that BRICS was a phenomenon of the last decade. PM Narendra Modi and President Obama interact at the G20 summit as well. Let's move on to sub-Saharan Africa. Yes, I was dead. It's true, I was dead. I resurrected, as I always do, once I get back to my country. I am real, President Mugabe. Foreign firms attacked at Ethiopia protests continue. Protesters in Ethiopia have attacked foreign businesses, according to the owners of the flour firm, as demonstrations in which rights groups say hundreds of people have been killed continued. The Dutch companies had crowds of people in the Oromia and the Amhara regions torched flour farms as they targeted businesses with perceived links to the government. Flowers are one of the country's top exports. Esmeralda Farm said its €10 million investment went up in smoke this week in Bahia Dar City, and that several other horticultural companies were also affected. Remco Bergkamp, assistant manager at Esmeralda Farms in the Netherlands, told Al Jazeera that the company would probably leave Ethiopia rather than rebuild the farm. The situation is not stable enough to run a business. You just don't know where the country is headed, he told Al Jazeera. It's a powerful comment. Gabon and the inglorious silence of African institutions. This is a tweet from Deutsche Welle News. My weekend piece was called Policy Making Errors Getting Creamed by the Markets. The news that Nigeria's economy shrank by 2.1% during the second quarter versus a corresponding period last year, following on a 0.4% decline in the first quarter, confirmed that the country is now in a recession. President Buhari maintained an artificial exchange rate from May 2015 through June this year of around 197 to 199 naira versus the dollar. Since June, the official rate has been allowed to float and was last at 315. The markets evidently still feel this is not the right level, and this is confirmed by the fact that the black market rate is 423. Inward investments into Nigeria have crashed, and one certain thing is that the West African state slows down further. Nigeria, which only recently was being feted as the biggest economy in sub-Saharan Africa, no longer, and the number one destination for foreign investors, is currently no longer a destination except for those who are trapped and cannot fashion an exit. It is a debacle, plain and simple. The president failed to seize the moment in May last year when his political capital was so elevated it was off the charts, and he could have devalued the naira on time. This policy-making failure has imperiled his entire presidency. I agree Buhari has been very bold in his anti-corruption efforts, but the truth of the matter is that he is playing golf with just one club. It's like watching someone trying to drive with a putter, and yet seemingly no one except the previous central bank governor, Lamido Sanusi, is prepared to tell him. I thought of introducing myself to him at TCAD, but then I too found him austere, no more than £140. It is clear that we will look back and see the Forex failure as defining his presidency. South Africa, which has so far skirted a recession but is skating on thin ice, has seen a renewed catfight break out over the national treasury. If Pravin Gordhan is removed from the treasury and President Jacob Zuma's allies are doing their level best, the rand will crash and burn. Reverses suffered at the local elections has not led to a moment of political introspection in the once revered ANC, but led to a renewed effort by Team Zuma to own the treasury. Last week we learned a number of fund managers had pulled the plug on Eskom. We pulled the plug on Eskom too yesterday, Rune Heskov, senior money manager at Jiske Bank, said Thursday in an email comment to Bloomberg. I could easily see more lenders follow suit. We see issues on lending going forward and more governance issues. The negative spillover effects of this catfight are there for all to see. The South African rand is back on the down move, and you can imagine what the departure of Gordhan will do to it. South Africa has regained its top dog position in sub-Saharan Africa. The rand has fallen less than the naira, but the economy is now in dangerous territory. I sometimes wonder whether President Zuma is actually trading Forex and the rand from the short side and laughing all the way to the bank. The commodity tailwind that filled Africa's sails is nowhere to be felt. In fact, it is clear that the commodity markets have permanently repriced lower. It is a reality that not all of our policymakers have onboarded. Two closely run and now contested elections in Zambia result President Lungu, leader of PF, won 50.35% of the vote against 47.67% for Hakainde Hichilema of the UPND, now being contested in the court. And Gabon, where results released by election officials showed Ali Bongo won by just 1.57%. Bongo won 95.5% of the vote in one of the country's 9 provinces, the Haut-Ogooué. Results from the province showed a turnout of more than 99%, compared with a nationwide turnout of 59.46%. Closely contested elections represent a clear and present danger in Africa. Investors in Africa need to tread very carefully and gingerly, just like the investors in bank stocks that the NSC have recently discovered. South African all shares up 5.54% this year, dollar rand 1440, 1438 area, short covering. In case you missed it, it's official. Dudu Myeni is nominated for a second SAA term. SAAA is nosediving. South Africa's murder rate climbs 4.9% to 51 people killed every day. Police also reported nearly 150 sexual offences per day. Egyptian EGX30 is up 17.63% this year. I was referring to the previous central bank governor of Nigeria, Emir Sanusi. Read his piece, his speech in full, how the Nigerian government caused an economic recession. It's powerful stuff. I will start by going back to the past, not just Nigeria, but Africa. Let's ask ourselves, what were the key drivers of growth in Africa? And what has changed since this golden decade Africa had? Africa's golden decade was basically a decade in the 2000s. Africa moved from the previous decade, where it was a hopeless continent, to a new decade that we have one type lifting all story of Africa rising. First pillar of growth was clearly shifting terms of trade, which, as we all know, in developing countries and economies can be a mirage. Second pillar of growth in Africa in that decade was debt. That was the retiring of debt, basically, leaving more space on government's balance sheets. It's a very powerful speech. Do take a look at it. Look at this. Per capita income in Kenya is $1,388. In Nigeria, it's $2,943. So on paper, Kenya is half as rich as Nigeria. Kenya, however, is able to raise tax revenue per capita of $232. Nigeria, $117. How much is Kenya spending on development? Per citizen, $129. How much Nigeria? $17. Very powerful piece. Nigerian all share down 3.09% this year. The Ghana Stock Exchange Composite Index down 9.27% this year. I like this photograph of a schoolboy walking on a bridge in Mamba village outside the capital, Antananarivo, Madagascar. Kenya reintroduces interest rate caps abandoned in 1991. I said we're still in this period of ambiguity and a lack of clarity. Not a positive situation, really. A number of key issues that are outstanding. The base rate will set it. What is it? Among a number of other issues. Barclays, Cooperative Bank, CFC Standard, KCB are among lenders who've said they'll reduce borrowing costs to 14.5%. Others have been slow. For example, Equity Bank, I haven't heard an announcement from them. Bob says, we're not sure the degree to which those limits apply to the two products. That's M. Shwari. My impression remains that this was a very populist decision. I suspect the government wants to send a very strong message, and there is still more negotiation to come around how to implement this properly. I also did an interview with Emmanuel Bunza of the BBC. Take a look at that as well. Kenya shilling, very stable, central bank managing that. Nairobi all share down 7.99% in 2016. That's this big sell-off we saw post that announcement about the interest rate caps. And the NSE 20 is down 21.11% so far this year. Excuse my voice, but thank you for listening.